Hey, Matt. Craig Parry, great to be back with you. I'm the chairman of Inventa Capital, founder of NextGen and ISO Energy, of course, chairman of Skeena Resources. I'm the chairman and co-founder of Vizsla Silver and Vizsla Copper. We're also on the board of Surge Copper. We have Outback Goldfields, Gold Bull, and I'm the chairman of both of those companies. And we've got a number of other companies that we're coming to the market with, three actually over the next 2 months. So we're a bit busy here.
Yeah, you are a bit busy here. But why aren't you on the road with your folks down at Beaver Creek or up in Denver, Colorado? Aren't they down beating down doors?
Yes, we have. I was down at Beaver Creek last week, which was a tremendous event.
Oh, you did?
Of course,
okay.
Precious Metal Summit. I've left the team down there to take care of what's going on at Beaver, or the teams, and they're doing a great job. But it was good to get down to Beaver Creek. Good to get out of Canada and Vancouver for a change and see what was going on. Good to see lots of very good companies. I think our Vizsla Silver was one of the standout stories. Charles Funk, who works with us, his Heliostar was a great story there as well. But really strong interest. I think this summer has been a very quiet summer, particularly for precious metal stocks, but all mining stocks. So we've burst out of the blocks. I think Beaver Creek's the first big conference of the fall season, and very strong interest there. And we've seen a good solid rally in most companies over the past couple of weeks. So it's looking like a very good setup for the back half of this year.
Were you getting nervous? Because it was like that summer lull happened, and it happens every year, but it's usually just August because people go on holiday. This year it seemed to go on a little bit longer, and obviously precious metals have been sort of suffering since, September last year? Were you a bit nervous about whether it was going to come back?
Well, look, a little bit. I've become mates with Peter Brown, and of course, Peter's one of the great observers of the market and the doyen of stockbroking here in Canada. And he observes that 7 of 10 years, you have a very strong rally out of the summer doldrums. The summer doldrums are typically always there, but come September, very strong rally. October, it's the crash month, so the first couple of months of October can be a little bit slow again. And then, if there is no crash in those first couple of weeks of October, things roll back to life. Well, we've seen a very strong, jump in markets. We haven't seen that in precious metals prices. Probably the most exciting thing that we've seen here in recent times was the copper price, nickel price, and then particularly the uranium price really roaring back to life. So I feel like we were a little bit nervous. Capital had dried up over summer, but I think everyone was exhausted after a fairly sort of tough 12 months with COVID and rallies in prices, commodities and equities over the back half of last year, that people wanted a bit of a break over summer. So my observation is that the fund managers have all come back behind their desks and have started buying in a big way. And you see that reflected in some of our portfolio of stocks. Vizsla Silver's roaring to life. ISO Energy's had a spectacular run in the last week. It looks like a very good setup for an excellent back half of the year.
Who thought people could get tired of making money? But the fund managers clearly did. That's kind of quite a good assessment, actually. So looking at uranium, obviously, that's the big hot topic of the past 3 weeks or so. The spot physical uranium charts just got out of the gate fast and hard and don't look like slowing down anytime soon. So ISO Energy, main beneficiary of that. All uranium companies are beneficiary of that. What's going to happen in that space? Has it got too hot and heavy and frothy too quickly?
Well, of course, this is, we've seen this coming for some time. We knew with the closure of MacArthur River, then Cigar Lake, and then, of course, the Kazakhs reducing their production by 30%. A lot of product was taken out of the market. You had Cameco, of course, the second biggest miner of uranium in the world, buying in the spot market to feed their long-term contracts. I think, that happened about 2.5 years ago. It's taken us a lot longer than we expected to work through the material that's been out there, but we're evidently through that. And then, of course, along comes Sprott, buys Denison's UPC out of Denison, creates the Spot Uranium Trust, SPUT, delightfully named, delightful ticker there. They've started buying, and we knew precisely the day they were going to start buying, which was Monday 3 weeks ago. And you see what's happened to the spot price. It's risen from $30. I think we're at about $46 today. Extraordinary jump in price. So to my mind, that's the straw that broke the camel's back. We knew it was coming, and then it just needed that serious buying. Now, we understand they've raised another $900 million to buy a product out of that market. So we're going to see, I think what we'll see is spot price will continue to rise strongly over the coming months. And then it becomes a question of, do those, complacent purchasing managers in the utilities, particularly in the US, that have been sitting there mopping up all the spot product that they can get and not going out and writing long-term contracts, do they panic? And of course, we saw this last time in 2006-7. Spot price went from $9 to $144. I think here, very good chance that when they see the price roar through $60 here in a week or two, that they will panic and start writing long-term contracts. We could well see $200 uranium, Matt. And, against that backdrop, you've seen ISO rise from $2 a week ago to, I think we're at $6 something today. Now, that's a little bit of a select story there, in that it's the only junior company drilling a high-grade uranium deposit as we speak, and they've got results about to come. But I think everything in the sector could go up, multiples, a little bit like we saw in 2007. So I'm super, super bullish on that. How long will that last? I think, the demand drivers are there for a long-term rally in uranium prices. Of course, you'll see over the next 12 to 24 months more product come into the market as some of these mines open up. But the demand's there now. So and you've taken a huge amount of product out of the market with, Sprott Uranium Trust, Yellow Cake in London, of course. So the scene's set for a tremendous rally in uranium. I'm very bullish. I wouldn't be surprised if we see, something like ISO Energy at $20, NextGen potentially at $20 or more as well. So it's going to be some exciting times ahead for uranium.
Where's this $200 narrative come from? I'm seeing it everywhere. I mean, who's done the numbers on that?
Look, I think that's always just a real thumbsuck. People are saying, of course, we saw that rally in the 2000s from $9 to $144. So the metal price was up 15 times. I guess people are thinking, well, the lows were about $16 a pound. Where can it go? 15 times that, somewhere north of $200 a pound. So, we're a chance of getting there. I think, of course, the marginal costs of production here the incentive price, I should say, for new production is really, apart from NextGen's Arrow deposit, most of the production around the world needs about $60 or $70 a pound. So we've got to see prices get beyond that before we see real production come back on stream, or new production come on stream. So it's got to be somewhere north of that, I think.
Right. Okay. Well, it'll be interesting to see what happens there, because I think there are obviously some of the conversations we've had, and people are questioning what some of the uranium developers are saying in terms of what they're able to produce. Because you obviously look at the trade techs of this world and UECs, they don't necessarily take verbatim what the company's saying as fact, and they're suggesting there'll be a lot less production. So I think that could obviously help drive the price, which is good, because there'll probably be a lot less actual producible pounds than perhaps are being stated. So it'll be interesting to see how this thing plays out over the next 12 months when term contracts are being signed, and at what levels and with whom. Because I think, again, talking about producing and producing, two different things, right?
Absolutely.
Right. Shall we go on to nickel? We got up to 935 yesterday. Settled back down around $9, I think. I mean, the prices are flying. Good nickel companies are being beneficiary of that. Where are you seeing this thing going? Some saying $10 by Q1.
Look, you could certainly see that. I can tell you that, here at Inventa, we've now got 7 listed companies. I think we've got 14 companies in total, 3 of which we're taking public at the moment. One of those is a nickel sulfide company. One is a copper business. We've spent the last 6 months scouring the globe for decent copper and nickel projects that are available to develop. There's nothing out there. I can tell you, it's extraordinary. The cupboard's bare. Of course, we've suffered underinvestment as a sector in the last 10 years. Not only have we done that, but we've laid off a lot of people, and we haven't trained anyone new much to come through. So when prices rise, it's going to take 2 or 3 years before we can bring on the people, train people up to help us build these things. So, there's going to be a massive lag in production, I think, for decent projects. And on the nickel front, it's extraordinary. Of course, you see Noront is subject to a bidding war between FMG and BHP for a relatively modest project, and a $500 million market cap company. So that's an extraordinary indicator.
And swampland as well.
Exactly.
Good luck with the infrastructure bill. It's going to be great.
That's right. So I really think that we could see massive breakout in nickel price. And of course, the thing that's always kept a cap on those prices has been the pig nickel production out of Indonesia into China. Now, we're not going to see that this time because that production is great for stainless steel, can't easily go into batteries. And of course, the planet, if we want to meet our Paris climate goals by 2040, we need to see the electrification of the world needs to be such that we need to see a 19 times increase in the production of nickel today. Where's that going to come from? I wouldn't, this is, Robert Friedland talks about this, the revenge of the miners is coming. Of course, you've got guys like Saudi Aramco out there, $2.5 trillion company. Matt, the combined market capitalisation of the entire mining industry and exploration industry today is less than $2 trillion. So that's, to put that in context, you've got Apple, $3 trillion company, Saudi Aramco, $2.5 trillion company. So those two companies alone are worth significantly more than our entire sector that's about to be called on to supply metals to the world for the electrification and decarbonisation of the world. People are going to have to pay up if we're serious about this. And, a 19 times demand increase for one metal, for nickel alone, that's going to have massive implications. I think that, we could see metal prices 10 times where they are in 10 years. So this sector is an extraordinary sector to invest in right now. This boom that's coming is going to be much, much bigger than the last one. Urbanisation of China, of course, a massive demand driver there. And that saw the 5-fold increase in things like copper prices, nickel prices. I think we're going to see, many times that this time around because the demand driver is so much bigger.
It's interesting what you say there. Look, and I had a little dig there at Wyloo and BHP bidding more, for some swampland. But, that is where BHP, who are now, got a whole office in Toronto dedicated towards nickel. Yet didn't see, that they've moved there recently. It shows you how few options they have elsewhere to get large multi-scale multi-cycle projects into the portfolio. One, nickel's important to them because they've said it, as is copper, as is potash. But finding projects of that scale is hard. They picked this up for a song. It may not seem like it right now, but they must believe that the infrastructure cost that they're going to have to, lay out for, I don't know, where's the nearest port? 700 kilometers away, something insane. They're gonna have to do roads, transport systems, all sorts of things to get this product, to where they need it. It's a tough one, but it shows intent based on their belief as to what is going to happen to the prices of these commodities, nickel and copper alike. So slight dig, but it's coming. It's coming. The prices will come. I'm sure. I think you're right. Can I just talk about silver for a bit, and then I kind of want to come back to some of the things that you said, because obviously you've got silver in the portfolio, and copper too. So, what are you seeing with silver market? Because precious metal's been off. Gold's been off. Silver's been off for a while. People are looking at many other things. Are people going to come back? Will prices recover? But do you need them to recover?
Yeah, good question. I'm relatively new to the silver market and getting up the curve here pretty quickly with the help of a few friends. I'm very privileged to now have become friends with Eric Sprott. So I was on a fishing trip with Eric 2 weeks ago before our trip to Beaver Creek, and Eric taught me a hell of a lot sitting on a boat with him for a day about the silver market. So I'm much better informed at the moment. Of course, we've got Vizsla Silver, so we're invested there, and Vizsla Silver's been doing a tremendous job and trading counter to the market. We've got a great discovery there. To me, silver sits right at the heart of, again, the electrification of the planet. It's in solder, it's in solar panels, it's in everything that we do. So it's again a true battery and electrification metal, if you like. So the demand drivers there, again, very, very strong. A lot of silver production is a byproduct. Of course, KGHM, surprisingly, is the world's biggest silver producer, producing about 50 million ounces of silver a year. So that's a little bit of a strange setup and surprise to find that. So you've always got those challenges. But again, around co-production from other, byproduct production, which can impact things. However, again, underexplored for. Mexico is the world's biggest silver producer. No one's been doing a hell of a lot of exploration there. We're probably largely on our own. Silvercrest and us, we've got 10 rigs at Vizsla turning at the moment, so lots of good news coming there. But the important thing that Eric explained to me is that it's the most manipulated trade on the planet. And we've seen that recently. JP Morgan got slapped with a $900 million fine by the US regulators for manipulating that trade. On that COMEX trade, there's a hell of a lot more companies, a lot more banks that do trade there. You'll see, Eric explained to me that you see in Asia on a Monday morning, Sunday night here in North America, spot prices in silver will rise, and then the COMEX comes on and it gets slapped down massively with a hell of a lot of short selling. So, that manipulated trade still goes on. He thinks with that fine of JP Morgan, nearly $1 billion, that those guys are now scared and on notice. And so that will flush out that COMEX trade over the next 12 months. And when it does, a little bit like the uranium market, we could see really explosive growth. He's thinking that silver will go through $100 an ounce. I don't know about that, but, I'd be happy with $50 an ounce. And, of course, there's precedent for this. That's happened before a couple of times. We've seen back in the early 80s and then back in the mid to late 90s, early 2000s, silver price run through $50 and beyond. Of course, that was on a different base. We're starting at $24 an ounce here today. So could we see $100 an ounce silver? Absolutely, I think. And again, it sits at that great macro theme that we've got of the electrification of the planet. So it's one of my favorite. I'm a late stage convert to silver, but it's one of my favorite metals. Absolutely.
It's kind of interesting. The JP Morgan fine, doing it at that scale seems obviously. I'm glad the regulators have kind of stepped in, but do you think there's a kind of problem all through the industry in the way that equities are managed, manipulated, shorted, etc. There's some, as you say, there's some funny old moves going on in the marketplace at the moment by the great and the good. And you've got to wonder if the regulators will step up the whole way through the food chain, or is it just, the big boys doing big numbers?
I think that's just coming naturally. We're seeing more and more of it all the time. So that will happen. Well, one interesting observation I think there that we have is that a bit of a corollary to that, but you've seen metal prices really rise very, very strongly, but you haven't seen junior equities rise quite as strongly to match that inflow of capital into the equities. Part of that, I think, of course, my latest and favourite observation about the sector is that not only is the market cap less than Apple and Saudi Aramco of our entire industry. But, extraordinary news out of Rio Tinto there a couple of weeks ago. $12.4 billion profit, and they're giving that all back for the half, and they're giving all that back as a special dividend to investors. So, and of course, next half, they're likely to do something similar. So, they're potentially going to reward investors with a $20 billion dividend this year. That's never happened before. That's Rio Tinto, the world's second biggest miner, trading at probably a 12 times dividend yield. Never, ever in the history of the planet has that happened. So that will draw generalist eyeballs into the space, as we saw back in 2005 to 2010. So I think there's about to be a wall of money coming out of the US and Europe for the major mining companies, and typically what happens is it trickles down to the mid-tiers and then into the junior space over 2 or 3 years. So, that boom hasn't kicked off in my view. We're in a bullish market, but that boom is coming over that sort of time frame for all of the sector. So watch out for that. And this is what, all of those things, why I say that just about every mining company on the planet, doesn't matter who you are, will be a 10-bagger from here.
Well, it's interesting that, because like the big companies have been a beneficiary of high prices over the past 18 months. And of course, they should give that back as dividends to their shareholders. But there's also this narrative, this, greenwashing of companies. The majors and some of the mid-tiers are dumping some of the less savory stocks. They're dumping coal, they're dumping oil and gas for green metals. This clean energy narrative that's going on is driving that. So there's this ESG narrative around, mining has long needed to tidy up its act, clean up its act, literally and figuratively. And it looks like they're trying to do that, being driven by the funds who are also jumping on board this ESG and green narrative too. So when you say the juniors will be the beneficiary of this, juniors typically are big destroyers of wealth. They have been historically, and they probably will be, because it's a tough ride. How do you think the majors are going to engage with juniors? What's their expectations of the types of projects that will and won't get financed?
Well, I think Noront is a very, very good example of what could potentially happen. Relatively modest company being gobbled up by the big guys. I think that they're going to. And of the majors, Rio Tinto has probably been the most engaged and successful on the exploration front. BHP largely doing nothing, and not much success from some of those majors. So they will be looking to our sector, the smaller end of the market, for world-class deposits. To give you an example of how we're playing that, Surge Copper, we took control of Surge Copper late last year. Fantastic company. I'm taking the view there we've got about 1 billion tonnes at about 0.5%. We've got a high-grade core to it. It's in central British Columbia, where we've got great First Nation support. Very importantly, on that ESG front there, we've got very low carbon potential production because of the hydroelectric schemes here in British Columbia that provide very low cost, clean, green power. But I'm taking the view that, and this is sort of to jumble up a whole bunch of themes there, but you look at what's happening in South America at the moment. Every few years they go through sort of Marxist-based ructions, and we're seeing that in Peru and to some extent in Chile. I think, places like Canada, where you can control the ESG outcomes on projects more readily, and you're under the microscope of serious regulators, that's where you should be building projects and focusing. Now, if we see an extraordinary opportunity, and we've found an extraordinary nickel opportunity in Central Africa, we'll go there. But, my preference is to look at, places like British Columbia, which I think will become the new Chile for copper over the next 10 or so.
Why do you say you can control it more easily? Because Canada seems rife with stories about First Nations stepping in and just saying, no, either we don't want it, or we want a lot more for you doing whatever it is that you want to do. Same in South America, same in Australia. It just seems to be a new narrative where power has transferred over to these First Nations groups.
Yeah, and that's fine.
And by the way, I should add here, Craig, before you give the answer, and I think rightly so, because
absolutely.
Okay, so
I agree entirely. I was talking to Adam Lundeen, who runs some of the Lundeen Group's copper projects in South America. He was talking about Lucas, his dad, flying down to Ecuador and sitting down with the government and saying to the president of the country, Mr. President, this is your metal. All we're here to do is help you get it out of the ground efficiently and create jobs. And that's the same for First Nations. We have to engage more successfully, acknowledge the fact that these are their sovereign nations in essence, and so work closely with them. And you can see that we're putting that principle in practice at Skeena. I think we're at the real bleeding, cutting edge of First Nations engagement there with the Taltan. Walt Coles and the team at Skeena have done a tremendous job of engaging, so much so that we've done a few key things there. We've handed back ground to them and to the province that they say will never be developed because they're sacred to the First Nation there. So we've done that, but we've now got ourselves in a position where the Taltan are investing into Skeena, into the company. So they've become our true partners and investors in the company, not just the project. So I think that's the future. That's the way we need to head, and everyone needs to benefit from these projects. So you've got to find that right way, that right approach. Sure, that's going to cost us a bit more, but not in the long run, because it shortens up your timeframes to development, provides jobs for everyone and social infrastructure and opportunity. So there, clearly there is a better way of doing it, and that we have to get better at that as an industry. Don't worry too much about any economic costs that you perceive that may happen from giving some of your project or partnering with the true traditional owners of these metals in the ground, because these metal prices, when they take off, are going to cancel out any of those issues over the next few years.
Yeah, I mean, well said. It's not short-term economics should not matter, because it's a case of if you want this thing to move ahead, you got to pay up. You will have to pay up, or you'll be sitting there for a long time. That's going to cost you more in the long run. Well said. There is also a conversation that we've been having where some fund managers are just slightly annoyed by this ESG green initiative, because it's just a tick box exercise. They've said, we've converted 50% of our funds to be ESG funds. No apparent reason. It's a tick box exercise. Could not care less. Things haven't changed.
Oh, look, I think you're always going to get some actors that will sort of treat these things as tick box exercises. I think that the world expects more of us, and if we are to get our permits in place and get projects built, you've got to follow these principles. And at Gold Bull, one of our companies, Cherie Leedon runs Gold Bull. We work together at Rio Tinto. We bought a project off Newmont last year. That's going very well. We were actually one of the lowest price bidders on the project, but they very much appreciated our commitment to those principles. When we present to Newmont about the project, we have 14 slides covering all of the ESG. We have a slide on diversity in there. So we're speaking the majors' language, and so we become a preferential partner for those sorts of guys. Walt's done the same there at Skeena, of course. To buy Escape Creek and snip off Barrick. Walt's taken that from a $20 million market cap to $1 billion company today by living by those principles and working with the Taltan. So you can pay lip service to it and get not far, or you can actually live the principles and do very well.
Right, just conscious of time. I know you've got to go off somewhere. You said a couple of projects that are going to come to market soon. Is that right?
Couple of companies coming to market soon. We've got a nickel business. We've bought a bunch of assets in Guyana. Very good gold projects that will be called Golden Shield. Mm-hmm. And there's another one there that that escapes me at the moment. We're also looking at a couple of other opportunities in carbon capture and storage space and carbon offset space as well. So lots going on in the background.
Okay. What's the common theme? Just remind us about Inventa Capital. The common theme with all of these companies is fundamentally strong assets on the ground. That's the number one for you.
That's key, absolutely key. In good jurisdictions, again, where we can control those ESG type outcomes. Projects that you can fund, and probably my biggest challenge at the moment with so much going on, so many companies, is people. Finding good people, experienced people, hungry people. So what I'm finding is that we have to train our own new breed of young, dynamic CEOs to lead these companies and organisations, and then that their enthusiasm will cascade through the business. So that's probably our biggest challenge. Also finding quality projects. We've been scouring the earth for copper as well, and there ain't many good copper projects out there today.
I'd agree. Well, look, Craig, appreciate your time today. Come on and talk to us whenever those projects look like they're getting off the ground or coming to market. You can come and tell us all about it. Tell our investors all about it. And best of luck with the current portfolio. Thanks for your time.
On you, Matt. Thanks. Always a pleasure.